Good day all. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 29th of May, 2019. We're about 5:05 p.m. Central Daylight Time. So we're already into the Thursday trade session. I'm just busy, so this is coming out a little later than my other videos in terms of when I recorded it in time. But you're backing off in the silver a little bit. You're up about $9 today, up about $3.50 in the gold, giving back part of that as well. The dollar index was up, even with the metals up today, and we're very, very stable in foreign currency trade. As you know, the stock market was down hard for Wednesday's session. Minor bounce in early evening trade, and energy's coming up because the API numbers were friendly. They showed a net draw of about 4.5 million barrels of product. Now we'll wait for the EIA in the morning, but that should be overall friendly. Now, in the gold market, if you look at a weekly chart of closes, you still have a downside bias. Anytime you close under the 18-week average, I say the bias is down, close over it. I say the bias is up. And I use that bias in my charting courses, you'll learn, to figure out filters. I'm trying to find ways not to make a trade, just the opposite of what you're probably used to hearing. But if everything says make the trade, make it. You're still going to be wrong a good percentage of the time, but money management, and then if your work is what you think it is, or your technique is what you think it is, or the market goes the way you think it's going to go, that's what you're hoping for. For the week, we're down about $4 in the gold right now. When you come to a daily chart, and this is the August gold now, you can almost see you've got a wedge here, and you're coming up this way. So the market's in a stall pattern right where it's at. You've got a pattern of higher lows, higher highs when you put the swing line on. If I take this chart back here, you don't see that. That's very important to see. In order to break the pattern, you've got to take out this low. And we come back there, and that's the low of an outside day up, which was 1277.50. Now, where is the market in relation to all important moving averages? Because they act as filters. They're under the 18-day average of closes. So while the swing line is up, it's countered completely by the fact that the bias is down since you're under that 18-day average. I have nothing right there. Simple way to look at it. What about the Bollinger Bands? Remember what a Bollinger Band does. It's an algorithm designed to keep the market trading within it 95% of the time, but it's also very important because if you understand the theory of it as well, I contend that the first time you go up to hit it or down to hit it, pros are waiting to take certain positions off the market. That doesn't mean the market can't run further and keep going down. That's not what the idea is. But if you're trying to catch the last tick in a market, God bless you, go for it. I don't know anyone that can. So as I'm looking at the market, I see that we're staying within the Bollinger Bands. To get to the lower Bollinger Band, you got to take out that important number I showed you before. If you can get up over 1292.60, well, the bias would turn up. The swing line would add another potential low in the market. Don't know where it would be yet, but it could be there, and put this into risk. So we're in an interesting part, but again, not trending, and you have momentum that is now oversold. You've any reading under 30 is oversold. Anything over 70, I define as overbought. So I have a market that is pretty much void of doing anything. I'll call it drifting more than anything else. You've got the same type of pattern in GLD, and I know you're going to say, but Ira, you're going to say it's higher lows, higher highs. I'm agreeing. But I'm also going to say that take a look at the settlements. You're underneath the 18-day average of closes, so the bias is down. You want to get me friendly? Close over that 18-day average of closes with this current swing line pattern. You didn't have this pointing up until today. You actually had, you can make an argument, highs and a lower and low. So that failed today to throw in the bullishness. GDX, higher lows, higher highs, but again, failing to get over that 18-day average of closes. Oversold. It needs to settle over that to give the market at least the bias back up. It's stuck, I think, between these bands, and it hasn't hit them, really. It's been since, what would that be? That'd be April, May, beginning of May, end of April. It's a long time, just drifting sideways in the market. The gold-silver ratio, still no big change in it. The market makes new highs, backs off a little, but still continues to favor the gold. The silver market remains in the bear camp with lower highs, lower lows. Now, I think the pros, possibly at this zone, we're taking some money off the table because you're oversold. You're not trying to embed, you're just oversold. You'd have to have both numbers staying under 20 for several days, and they're not doing that. So I just see an oversold condition. In copper, look, the market yesterday, let me show you this. Here you are, you lose the embedded reading. Do you see how the number closed at 21? There's tricks to this, and I teach it in my charting course, but it's the next day after it loses the embedding that it can re-embed. And you look to see where in the range the market is, and then the next day's opening to get an idea. You open steady and immediately re-embed it, and tonight you're keeping that re-embedding. So the bears are still in control of the market. Now I will be watching carefully to see, can we reach down to that Bollinger Band? If you should turn up this slow stochastic again, it'd be a sign for me to go, time to not be short anymore. So far, and I'm not giving you an idea here, you should buy, sell, but if from a general perspective, how could you argue? Lower highs, lower lows under the 18-day average and embedded. I still say the shorts are in control. In the platinum market, I think the shorts are in control. You've got the embedded reading, you've got the lower highs, lower lows, you made new lows on the whole move today. Still a bear play. Where you've got a different world is in the palladium market, but we have to understand that palladium from December all the way up to this high was almost a straight line. Yeah, you had your little corrections, but you kept making higher highs over the pattern, and it stayed over that 18-day average for months on end. Now what you've got is a market that has decided that the correction phase of that rally may have run its course, but you're very much stuck in this sideways bowl of doing this. Just spinning your wheels without a real trend. I see two levels of resistance, 1354 to 1365, the 100-day average in the upper Bollinger Band. You have bias that's up, but you're overbought as can be and you're not trending. In the dollar index, I would look for resistance at the upper Bollinger Band in an overbought condition. And that seems to be what it is. Are we trending here? No. Study these Bollinger Bands. You're very much sideways. Yes, the bias is up. You're over the 18-day average, and it's found its support on the correction right there. If it wants to continue, fine. But this pattern cannot create, for me at least, a higher high, higher low right now. It's easier if you get down, and you get down under 97.41 to say, without getting through 98.26 first, that's going to be the key, lower highs, lower lows. Am I bearish here? No. The idea of a chart is looking to see the possibilities. Take that out and I'll have a different game. Then I'll be in the more bearish camp. So I put that together, look to see what the markets are going to do, and you take it from there. Now, one of the things that I'm offering for this Memorial Day week, and it's going to end on Friday probably, is that you can buy my charting course for a big discount should you decide to do so. And I only do it a couple of times a year, so there's not much more coming at you. But you see what I do, and you do the exact same thing. It's 54 video chapters, about 6 hours of videos. And you're going to learn my 5-step method of swing lines. First, I'm going to teach you how to draw them yourself, so you don't even need this. You can look at a chart and draw it if you'd want 1, 2, 3. The second, moving averages. Which ones do I use? You're not seeing them all here, so don't think you do. And there's a key moving average that I don't show in these videos. It relates to where price is to the 18-day average and what you do with it. The third thing is more tricks with the slow stochastic, because I think that momentum leads price, not price leads momentum. Bollinger Bands, I think that I'll give you my grasp on how it works, and you take it from there. And something you don't see here, window envelopes. Now, why don't you see all these other things in these videos? Number one, they're for my subscribers. That's number one. Number two, it confused the heck out of most people, because there'd be all these lines on a chart, and they'd go, which one? After the course, it's like a roadmap. One's telling you, hey, here's the rest stop, here's a gas stop. That's how it works. So here's what you get with the course. You get the 54 videos. You get my market research. You're going to get a video in the morning, a fresh video that walks you through what you're learning. What do I mean by that? I review 40 charts in the morning with 5 more that are typically ETFs. I try to get that for you each day. And I certainly get the 40 done. Then my charting software. Now, if you've tried our software, because we use outside vendors, generally not all of you have used both the web-based or the Java. So we're typically able to take care of it one way or the other for you. So that's the easy part of it. But the key is rote. You see what I do, you do the same thing, then in the morning, you're coming in and you're saying, look, there's that swing line that I just learned last night, or there's that moving averages, he's talking about it. And it starts to come together. That's the idea for an understanding of a trade methodology. Methodology. I wish it was mythology. Methodology. And if it was a mythology, boy, I'd be really rich. So the idea here is, can I teach you what I know? I think I can. $99.95 instead of the $169.95. Next week the course goes to $179.95. So if you put together all of the values, the charting software near $100 value, the research $60 every 30 days, you get the free mobile application with it as well. Then, of course, the morning videos and everything else. It's a holiday. Why not give the holiday pricing? $99.95. Should you need more time, we can work that out with you too. But most people are finished with this in 2 to 2.5 weeks maximum. I'm assuming they're going through each chapter multiple times. It's really not that hard to learn the method. I'm Ira. Thanks for watching. Hope you take advantage of this. And remember, if you click up here, you'll be taken, if you're watching me on YouTube, right to that page. Otherwise, go to our website, and under the word education is where everything's at. Have a good night.